Good afternoon. This is Business Live with me, Ian King. We begin this afternoon with that news on inflation, which we learned today fell by more than expected last month. The Office for National Statistics says that the Consumer Prices Index measure of inflation stood at 3.4% in February. That was down from 4% in January and the lowest level since September 2021. It was driven largely by a fall in annual food price inflation, which came down to 5% in February from 7% in January. Well, with inflation now at its lowest level in more than 2 years, the Chancellor, Jeremy Hunt, says it could hit the Bank of England's target of 2% within months.
In the main, I think that, the numbers are doing what I think most of the city expected them to do, fairly broad-based declines, food prices leading the charge as expected. But it does look as if, having had some very strong increases in prices a year ago, we're just struggling to match up to those, and that's helping to bring headline numbers down. I think we'll see much more of that over the next few months.
Well, luxury stocks have taken a hit today after Kering warned of a big drop in sales at its largest brand, Gucci. Kering, which is majority owned by the French billionaire François-Henri Pinault, saw more than €7 billion wiped from its stock market valuation at one point following a slump in Gucci sales in China. Well, that dragged down the price of other luxury names, most notably Burberry, but also LVMH, Christian Dior and Richemont. I've been speaking to CNBC's France and luxury correspondent, Charlotte Reid.
It was very much in fashion over the past decade or so, very successful. But over the past couple of years, it had a bit of a slowdown. And so the market was giving the benefit of the doubt to Kering with Gucci because they saw that the company was putting all the hard work in. They brought in a new CEO, a new creative director. Also, they created a beauty division at Kering because high-end beauty is very much in fashion. They invested in a lot of their other brands as well to kind of reduce the reliance that they had on Gucci at Kering because it makes half of their sales. So they very much rely on the success of that brand. So they invested in Yves Saint Laurent, Bottega Veneta, they bought a stake in Valentino. So the market thought, look, Kering is doing all the hard work in turning around the strategy for the group and for Gucci in particular. And so in the fourth quarter, Kering said, look, margins will be impacted for us in 24 because we're putting a lot of investment in all our brands. And the market applauded at the time. But of course, now we had this new warning from Kering saying the sales are going to be very much impacted in Q1, particularly at Gucci, down 20%. So it looks like it's beyond a local problem there for Kering and for Gucci. It particularly looks like in China, there's no demand for their products.
Why, though, has it lost its way compared with the likes of Louis Vuitton and Dior?
And look, there's a real split there after the post-pandemic boom and demand for luxury. It looks like now there's a slowdown. Some analysts say it's just a normalization of demand, but it's very much splitting the winners and the losers in the luxury sector. And it looks like for Gucci, that has been so much in fashion for about 10 years under the previous creative director, Alessandro Michele, very flamboyant kind of aesthetic. It kind of went out a bit of fashion. And they brought in this new creative director, Sabato De Sarno, who had just a couple of shows, and his collection just hit the shops only mid-February. So it's very, very early days for him and see whether the turnaround, more of a kind of a quiet luxury kind of aesthetic, so very far from the previous one, whether it works or not. They try to elevate the brand, make it more exclusive, make it more expensive as well. So the question is whether that will work or whether the aspirational buyer is not going to buy those Gucci products anymore.
So how much time do you think investors will give him then?
That's a very good question. And that's why a few notes I saw from analysts today said, look, we shouldn't extrapolate what we heard from Kering about the health of the luxury sector and the health of the Chinese buyer for luxury. This could be very much just a Kering and Gucci issue. So they're willing to wait a little bit more because, again, this collection has just come into the stores just a few weeks ago. They want to wait a little bit and see whether the turnaround is working. But there's also issues with the other brands because Yves Saint Laurent, Bottega Veneta, all these brands were down last year. All the sales went down across the board. So there's really a bigger question of will they boost their sales with the other brands as well.
Yeah, so is this a Kering-specific issue then, perhaps?
It looks like it's the case, especially, again, they rely so much on Gucci. They're working to diversify the portfolio. Again, they invested in beauty, high-end beauty doing very well. They bought Creed, the high-end perfumes, for $4 billion. Last year, they said as having actually positive input into the company. They bought a stake in Valentino. Again, they try to cut their reliance on Gucci. But the market, again, is looking, when you look at the shares over the past 2 years, Kering is down 40%. LVMH up 30%, and Hermès, the very high-end bags where you have a waiting list for, they're up 93%. So very much the view of the market is very clear. There are some winners and there are some losers. And maybe people as well are buying less luxury, especially their aspirational buyer. And now they go to their, instead of again buying 3, 4, 5 products of luxury per year, they buy 1 or 2, and they go to their must-have brand. And their must-have brand sometimes is Hermès, sometimes is Vuitton. It looks like it might not be Gucci or Burberry, for example.
Well, I was going to ask you about the read across for other stocks. If this is a Kering-specific issue, is it right that Burberry is sold off, for example, so much today?
Well, that's because Burberry is also quite reliant on the Chinese buyer. So some are extrapolating what the comments that we had from Kering onto other brands. But again, I saw a lot of analysts saying we shouldn't extrapolate these comments to the overall luxury sector. It looks like it's very specific to Gucci and Kering.
Now, the business is 42% owned by Francois Pinault. How long is he going to tolerate this sort of underperformance?
Well, that's a good question. Again, they said at the moment they're going through short-term pain for long-term gain. They're working on turning around the company. Now the question is, if the shares are going down so much, could they be target potentially from a takeover from another luxury giant? Before, a couple of 2-3 years ago, it was whether Kering was going to buy another group. There were rumors around Richemont. Now the question is if the stock continues to go down, and again, it's down about 40% over the past couple of years, could themselves be a target? I
mean, that would have, as you say, that would have been unthinkable even a few years ago. Would a takeover get past competition regulators?
Oh, that's always big questions, particularly around LVMH, that is so big and has made so many acquisitions. At the moment, there's never been an issue when it comes to luxury and whether those conglomerates become bigger and bigger. So we'll have to wait and see. But this is not the case at the moment. Again, there's a controlling stake by the founding family. But that would be very, very interesting to watch.
I mean, how would that go down with the French public? Because these are businesses that are icons of French corporate culture.
Yes, they are. You have these barons of luxury. I mean, whether it's LVMH, Kering or Hermès, it's all the founding, not founding families, but they're held by families that are very much part of the soft power, to a certain extent, of France. They travel often with the government or the president when there's a big official travel abroad. They're also very international groups, obviously. They are French-owned, but a company like Kering obviously owns Gucci, Valentino, Bottega Veneta. That's very oriented towards Italy as well. So they are French, but also very international.
Charlotte Reed speaking to me earlier. Some other stories for you now. And the Chancellor, Jeremy Hunt, has today ordered HM Revenue and Customs not to go ahead with the proposed closure of its self-assessment helplines between April and September this year. HMRC had announced yesterday that it planned to permanently cut the number of telephone lines available to help taxpayers with help with self-assessment, VAT returns and PAYE issues on cost-saving grounds. The move was widely criticised, with the Chartered Institute of Taxation and the Institute of Chartered Accountants among those urging a rethink. The Materials and Sustainable Technologies Group Johnson Matthey is selling its medical device components business to Montague Private Equity for £550 million. The unit, which has manufacturing sites in the United States, Mexico and Australia, provides components based on precious metal alloys and nitinol, which is a metal alloy of nickel and titanium. Well, JM said the sale brings to an end the divestment programme it began in May 2022 and which controversially included the sale of its high-performance electric car battery business. Some £250 million worth of the sales proceeds will be returned to shareholders. That sent shares of JM up by more than 5% this morning. And the FTSE 100 insurer Prudential today hailed the return of mainland Chinese visitors to Hong Kong for boosting life insurance policy sales and helping it return to profitability. The Pru, which has spun off its UK and US operations in recent years to focus on Africa and Asia, was reporting a full-year profit after tax of $1.7 billion for 2023, which was up from a loss of $1 billion in 2022. Well, apart from a surge of buying by visitors to Hong Kong from mainland China, the Pru also highlighted big increases in policy sales in Indonesia, Philippines, Malaysia and Singapore. Now, just over 40 years ago, amid a global glut of Scotch whisky, the Port Ellen distillery on Islay closed. The distillery went on to achieve cult status among whisky aficionados, with the remaining bottles of Port Ellen now changing hands for thousands of pounds. But 6 years ago, its owner Diageo announced plans to reopen Port Ellen and another so-called ghost distillery, Brawler, in the Highlands at a combined cost of £35 million. Well, today saw the official reopening of Port Ellen. And joining me now live from the distillery is Ian Smith, he's Corporate Relations Director, at Diageo. Ian, great to see you this afternoon. What a sight to gladden the heart of whisky lovers. What's been the biggest challenge in reopening this distillery?
Hi Ian, thanks for having me on the show. Delighted to be joining you from the new reopened Port Ellen distillery here on the wonderful whisky island of Islay. Islay's an amazing place to make Scotch whisky, and we've had an incredible journey over the last few years to bring this distillery back to life, really delving into the history and the heritage of the distillery, working with the local community and our employees who worked at the distillery back in 1983 so that we could bring it back in a way that really resonates with those whisky aficionados around the world that you have just talked about who really love Port Ellen.
And in terms of the production, how much whisky will this site be able to produce when it's running at full capacity?
Yeah, so we've built this distillery from the ground up to reproduce the amazing Port Ellen whisky that has become famous from pre-1983. So the stills you see behind me, these are our amazing Phoenix stills. We'll produce whisky exactly the same as it was produced in 1983. But we've gone further than that and created two other stills that are just on the other side of the still house here, experimental stills where we will be trying out new innovations in Scotch whisky and pushing the boundaries of Scotch. And altogether, that will have a capacity of about 1.6 million litres per year, relatively small distillery, but giving us a great opportunity to create new generations of this incredible whisky.
Obviously, the whisky will need to be aged. Have you started taking orders yet?
Yeah, well, listen, the whisky, as you know, has to be aged. That's one of the magical things about Scotch whisky. So we're not ready yet to, we're going to take our time, and everything's about quality here at Port Ellen, releasing absolutely perfect whisky at the perfect time. Not quite ready to reveal when that will be, sorry.
What is it about the character of Port Ellen whisky that's made it so sought after?
Quality really is so important here at Port Ellen. The quality of the liquid. And it's amazing, it's got that classic Islay character, peat smoke obviously being a signature note, but it's a medium peated whisky. But it also has lovely fruity notes, and it just matures beautifully in the cask. And that quality has made it so highly sought after by whisky lovers all around the world.
Now, separately, you've started selling a new collection of original Port Ellen, 44-year-old, I think. They're going for £45,000 a pair, I think. What sort of interest have you had in those?
Yeah, to mark the launch of the new distillery, we've also launched the Gemini. It's a twin collection of bottles, and we're having incredible interest in that whisky from those whisky aficionados that you referenced earlier. People around the world incredibly interested in the relaunch of the distillery, but also that precious liquid from back in pre-1983.
How much of the original output from Port Ellen is still left? How much of it is in existence?
So, Ian, that would be one of those top secret things that my colleagues in the whisky blending team would not appreciate if I shared with you. So, but listen, obviously, liquid that was distilled before 1983 is increasingly precious and rare. And that's why another reason why it's so special and sought after.
But you have been using it, I think, in Johnny Walker Ghost and Rare, for example.
Yeah, we do occasionally drop some of those special Ghost Distillery liquids into other products, such as the Johnny Walker Ghost and Rare. But and listen, this is what's so great about us bringing the distillery back. We're going to be able to create new generations of Port Ellen for the future, really focused again on that amazing quality. You just have to look at the distillery behind me to see the quality of what we've created here on Islay.
Now, last year, I think more than 1.1 million people visited your distilleries. Is there going to be a visitor centre at Port Ellen?
Absolutely, and so yeah, we had a terrific year last year at our visitor experiences. First time we've had more than 1 million visitors. So here at Port Ellen, yes, we will welcome people into the distillery to show them around, including opening our doors to the local community and people on Islay to come in to the distillery as well.
And where do most visitors come from these days, Ian? Are they international visitors or are a big chunk of them domestic as well?
It's a combination of both. We're still seeing the tourism markets re-establish itself post-COVID. So we have had more domestic visitors than we did pre-COVID, but we've seen the US market coming back really strongly here in Scotland. Scotch whisky, golf, the beautiful kind of heritage of Scotland, all attracting US visitors in tremendous numbers. We're seeing the return of the Asian markets, Chinese visitors starting to come back. That's been a little slower, but we're we're gearing up for the best summer we've ever had in terms of Scotch whisky tourism here in Scotland.
Good to hear. Nice positive note on which to end. Ian, great to talk to you this afternoon. Thank you.
Thanks, Ian.
Still to come here on Business Live, we'll have a look at how the markets have finished up this Wednesday afternoon. Stay with us.
Well, I think we all know that there's a need with an aging population and a growing number of people, not just with dementia, but also with other frailties that mean that they stay at home most of the time, to make sure that they have the support that they need. And at the moment, that's primarily delivered by people visiting and spending a small amount of time with them. With robotics, you've got the opportunity to give people a companion 24/7. In situations where they're not able to, for example, have a cat or a dog and look after a cat or dog properly, then giving them some form of robotic companion replaces that emotional companion and that friend in the home that they otherwise wouldn't have. But I think if the choice is between no human and a robotic companion, then a robotic companion is better than no human at all. And I think for a lot of people, they spend an awful lot of time in isolation, either because of mental or physical frailty. Making sure that they have some kind of companionship can only be good for their mental health and probably takes the burden off the health services as well. We're working on a number of different areas, everything from agriculture to manufacturing, space, healthcare, social care. We're working on offshore energy, we're working on nuclear energy. Robotics is pretty ubiquitous now and being explored by many sectors of our economy as a tool to help achieve the kind of things that we want to achieve, whether that's replacement or augmenting the workforce and making sure that we've got people where there's labour shortages, or whether it's doing work in dangerous and difficult areas. They're becoming very common now. So there are many manufacturers around the world now that have four-legged robotics. It's better balanced than two legs, but it's able to go into areas that tracks and wheels and other kinds of locomotion can't.
You want to talk business? Meet me in the On-Board Lounge. Fly Emirates, fly better.
Well, stocks have finished trading for the day across Europe just now. Here's how they've finished on mainland Europe this afternoon, mainly in positive territory. Only the CAC 40 in France letting the side down a bit. I think that was down to the Kering profits warning. Talking points this afternoon include BioNTech. The German vaccine developer is off 6% in Frankfurt after it reported an unexpectedly large drop in annual earnings. The resignation of Leo Varadkar has had little impact. The Irish stock index has traded in a very narrow range all day. It's finished down 0.3%. Well, here in London, the FTSE 100 has finished more or less unchanged, as you can see there. The biggest faller today was Prudential. Nothing wrong with the results, but sales in its Chinese joint venture came in a bit shy of expectations. Meanwhile, Burberry has fallen by just over 2.5% in sympathy with Kering. Among the gainers, Ashtead topped the FTSE leaderboard. That was after its credit rating was maintained by one of the agencies, while the Health, Safety and Environmental Services Group, Halma, has risen by nearly 4% after it received a push from one of the brokers. Elsewhere, Johnson Matthey, Close Brothers, has risen by 9%. That's after yesterday's trading update, continues to win over a few followers. Meanwhile, Johnson Matthey, mentioned them earlier, they finished up 7.75% on that return of capital to investors. To the downside, the technology services group Computer Centre has fallen by 5.75%, despite reporting record results. Over on Wall Street, it's been a pretty quiet opening ahead of this evening's interest rate decision from the US Federal Reserve. Among features this afternoon, the fast food chain Chipotle Mexican Grill. That's up nearly 5% on news of a stock split. On the foreign exchange markets, again, very, very quiet ahead of the Fed decision tonight. Pound fell slightly against the dollar first thing, but it's recouped most of those losses as the session has gone on. Meanwhile, the oil price, that's given back a fair chunk of yesterday's gains. Barrel of Brent crude currently changing hands at $85.88 a barrel. That's down a little under 1.75% on the session. Well, joining me this afternoon is Georgina Cooper, UK Equity Portfolio Manager at Newton Investment Management. Georgina, great to see you this afternoon. Let's start with Prudential. I mean, the numbers look very, very good on a number of fronts, yet the share price has taken an absolute pasting. What's going on?
Yeah, absolutely. I mean, as you say, the headline, the net new business growth is very strong. The margin they're delivering is very good. And, the underlying trends are very strong in the sense that we have an ageing population. The demand for healthcare is very strong. So that underpin and demand for life insurance is clearly going to be there. I think what you've got here is clearly you've got Chinese sentiment is still very weak, and that is one of their key markets. So it remains a bit of a show me story in terms of the resilience of that growth and recovery. And that's coupled with the fact that we've got a fairly new management team that remain unproven. And, there was a bit of a story today around the capital allocation there in terms of the lack of buyback surprised some investors, which I think is what's actually been weighing on the shares today.
That's interesting. Now, elsewhere in Europe, Monza caught your eye, the Swiss contract drug maker.
Yeah, so, I mean, it's a stock that was really quite beaten up last year. Generally, the biologics, biotech space was vulnerable to the destocking that we saw on the back of the pandemic. But I think what was clear is that underlying growth was very much still there. And today's announcement of buying another manufacturing plant really just goes to show that that underlying demand clearly is there. They've upgraded their guidance for 24 to 28. So the demand for, again, it comes back into that ageing populations and the chronic disease and the need. And I think particularly for Lonza, where the outsourcing market, where they're contributing to the outsourcing, the complexity, the regulation, these guys are ever more important to the pharma companies to be able to deliver on that demand.
It's a hot sector, isn't it? I mean, we just saw Novo Nordisk, of course, buying a big US manufacturing capability. Would you expect to see more deals of that kind?
I mean, it's very clear that the demand is there and that we have a shortage of manufacturing demand. I think the easy route to market is clearly doing deals because you're getting demand, you'll be able to deliver supply in quick term rather than the capex build that may take 4 or 5 years. So where there is availability, then that could certainly be something. But I think the question is the amount of supply there really is that could drive those deals.
No, it's all about the macro for the next 24 hours, really. We've got the Fed tonight, the Bank of England tomorrow, and the ECB as well, of course. Not expecting any policy changes from any of them, are we, though?
Yeah, I mean, they've made it very clear that this is a long game and we are very much looking at the same data points in terms of the decisions that are going to be made. And, It varies slightly by region. We've obviously had the inflation print this morning from the UK, which has come in lower, which could be encouraging. But at the same time, you know, the services data, the services inflation is still very sticky. So you've got to look at it holistically, whether or not that's enough to drive any change in decision making. I think the US certainly is a hotter market. So there's potentially more scope to disappoint and push out that decision making if we're seeing that continue to be sticky, but yeah, we're looking at the same data points.
Yeah, I ask a lot of guests in your position who's going to go first, the European Central Bank or the Fed, and opinions really do vary. Where do you stand on this one?
Yeah, I mean, if we are going on data as they claim to be, then it would suggest that it'll be UK or Europe first, but data points are very short-term in nature, and there's a lot of nuances that are driving it. You know, the energy we've had a mild February, so the energy numbers come in a bit better, but it could very easily change later on into the year. So we will see. We
will see indeed. Georgina, got to leave you there. Great to see you this afternoon. Thank you. Just before I go, a bit of breaking news to bring you. In the last few minutes, the House of Lords has just voted to amend the government's Rwanda migration plan legislation. That means a likely fresh delay for the government's plans. We will have more on that in the News Hour with Mark Austin. That's coming up right after this short break. Stay with us. I'll see you tomorrow morning at 11:30. Thanks for joining me today. Cheerio.